Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was a wrap of the biggest stories over the past week. I'm Sean Aylmer. It was a short week as a result of the Queen's birthday long weekend across most of the country. Funny how the only time we all agree to like royalty occurs when there's a holiday. Will we still have a holiday when Charles is the sovereign? It would be a bit weird having a day off to remember his birthday. Anyway, I digress. It was a week full of incredible economics, market-moving Federal Reserve pronouncements, major changes to superannuation laws, and some big, and I mean really big, spending by corporates. There was plenty of international news around. The Group of Seven, that's the largest economies in the world, met last weekend and agreed to keep spending money to boost their economies. They also committed to attacking climate change, financing infrastructure projects in poorer nations, and to push back on China's ambitions in the Indo-Pacific region. Aussie Prime Minister Scott Morrison got a Guernsey, and he pushed hard on China. In fact, it was a big week for the Prime Minister on the global stage. Mr Morrison and his United Kingdom counterpart Boris Johnson signed a free trade deal, first one for Britain post-Brexit. Local beef and lamb will have tariffs reduced over a 10-year time frame and increasingly land on the dinner tables of Londoners. There'll also be a drop in tariffs on sugar and rice, while it will be easier for people under the age of 35, that's not me, to get a working visa in either country. Mr Morrison also visited French President Emmanuel Macron. The two nations are working on a free trade deal, though that's some way off. Of more interest was Australia's agreement to spend $90 billion, yes, $90 billion, on French-made attack-class submarines. It's been a rocky project, shall we say, right from the outset, with cost overruns and criticism about the lack of local involvement. The PM said the situation had improved, but I've no idea what that actually means. Our Prime Minister wasn't the only one taking advantage of his trip to Europe to catch up with friends. US President Joe Biden met with Russian President Vladimir Putin for the first time. Not that they're necessarily friends. Mr Putin called it a pragmatic dialogue, and there was no friendship. Hardly a warm endorsement. In other international news, Israel's longest-serving Prime Minister, Benjamin Netanyahu, his reign ended after an unlikely coalition of left and right-wing parties formed a new government. The new president is Naftali Bennett. It was a big week for global markets. Wall Street started strongly, but a pivotal moment came on Wednesday when the majority of US Federal Reserve governors said they expected the next move in interest rates in the world's largest economy to occur in 2023, a year earlier than previously forecast. The comments had big ramifications, setting Wall Street much lower and bond yields higher. Suddenly, stocks that did well when economies pick up, known as value stocks, fell out of favour. Instead, the tech companies on Wall Street outperformed. The comments out of the Fed had consequences throughout global markets. Oil prices had been heading higher, trading at 2-year peaks, but then fell back towards the end of the week. Gold prices also dropped. The Aussie dollar, which has pretty much done nothing and been hanging around 77.5 US cents for months, tumbled below 76 US cents. It was a cracking week for the local bourse. The S&P ASX 200 hit new record highs as confidence about the economic rebound improved. Market leader Commonwealth Bank, retailers Wesfarmers and Woolworths, building materials company James Hardie, hearing implant group Cochlear, sleep apnea group ResMed, retailer Premier Investments, Domino's Pizza and fund manager Perpetual all hit new records. That's quite a week. The strong performance of the market means superannuation funds are on track to have one of their best financial years in decades. Experts are tipping returns for growth funds of 15% plus, much better than last year's drop of 0.6%. It was a week in which New South Wales experienced a community-transmitted COVID outbreak, which has been contained so far. The man contracted the case possibly while transporting airline staff to and from the airport. The country is now on high alert, with fears restrictions might be imposed around travel movements. It's not what's needed a week before school holidays. Fortunately, the number of community cases in Victoria continued to fall, and restrictions in the southern state have been eased. The other major COVID news was the government changing its view on who should receive the AstraZeneca jab. The age limit is now 60. That means anyone under that age will get the Pfizer inoculation. Low-paid workers got a boost this week. The Fair Work Commission gave around 2.2 million workers a 2.5% pay rise. The decision flows through to other awards, so many employees will get a similar rise. The minimum hourly rate will jump to $20.33, though workers in some sectors, notably aviation, tourism and hospitality and retail, will have their increases delayed. The union said it wasn't enough. Business said it was too much. On a side note, Woolworths said it would immediately pass through the wage rise to its 155,000 employees and not delay. The long weekend couldn't stop strong clearance rates at auctions, and later in the week, official data show that house prices across the country rose 6.2% during the March quarter. The total value of housing across the country is now worth $8.3 trillion. And the average price of a residential dwelling in New South Wales is now more than $1 million. The federal government had a big win in its efforts to reform the superannuation sector. It gained the support of the Senate for its Your Future, Your Super legislation. The changes mean an employee can automatically keep their super fund when they change jobs, rather than end up with a bunch of accounts. There's also changes to annual performance tests for super funds and regulations around ensuring the fund is doing what's in the best financial interest of its members. Treasurer Josh Frydenberg claimed the changes would return billions of dollars to members. Let's hope so. As always, there was plenty of corporate news around this week. Macquarie Group has taken a stake in Italy's biggest road network as part of a consortium spending $14.6 billion on 3,000 kilometres of tar across the country. There were reports this week that BHP is close to pulling the trigger on a giant potash mine in Saskatchewan, Canada, at a cost of $7 billion. BHP has long wanted a fifth pillar to its mining business, and potash, which is used in agriculture and improves water uptake in plants, has been on the radar for decades. It would join iron ore, copper, oil and gas, and coke and coal in the BHP stable. The one outstanding issue is access to ports. Coles Group will spend an extra $300 million to accelerate automation in its distribution centres and improve the supermarket's ability to compete in coming years. Chief Executive Stephen Kane this week said it wasn't just about low prices. Not sure about that one. E-commerce capabilities were increasingly important in winning over customers. The Chief Executive Officer and Chief Financial Officer of Newey, last year's largest initial public offering, will leave the business following a shareholder backlash over the group's inability to meet prospectus forecasts. That was the big news out of that company this week. And Network 10 won the broadcast rights to Australia's international soccer games for $100 million. 10's owner, Viacom CBS, last month signed a $200 million deal to broadcast the A-League and W-League fixtures. 10 has well and truly become the home of football. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week was the labour market. The unemployment rate in Australia fell to 5.1% last month, back to pre-pandemic levels. More than 115,000 new jobs were created during May, mostly full-time roles, and there are now tens of thousands more jobs in the economy than before the pandemic. In fact, the unemployment rate is where Federal Treasury hoped it might be in 12 months' time. So, why is it the biggest story of the week? Because the pressure is now well and truly on the Reserve Bank to change its monetary policy stance. The central bank has stuck to its guns. It doesn't want to move on rates before 2024. But this week, the US Fed changed its tune, and many market economists think the local central bank should go earlier. All eyes are on Martin Place. The sleeper story of the week was from BHP. It's being sued by a former male employee who was earmarked as a future leader, but who kept missing out on jobs to female applicants. The man's alleged a systemic pattern of top-down sex discrimination in a US lawsuit. BHP aims to have a workforce comprised of 50% women by 2025, and it will defend the suit. The claim argues that the man missed getting jobs as a direct consequence of BHP's strategy to increase females in its workforce. What to make of that? Well, for centuries, women have been discriminated against by men in the workplace, but that probably doesn't count in the court of law. It seems there'll be more of these sorts of stories in the future. It's a sleeper. The most remarkable story this week was tricky. So many applicants. I loved the one about an anonymous bidder spending $28 million to take a flight into space with Amazon founder Jeff Bezos. Then there was the auction where 2 Australian coins, minted in 1920 and 1921, were sold at auction for about $1.5 million each. I also like the yarn about the seasonal flu in Australia disappearing. In May 2019, there were 30,000 confirmed cases of influenza. This year, there were 71. That's what happens when you close the borders. I didn't like the story this week about the Australian club in Sydney voting to continue its ban on allowing women to be members. But I think the most remarkable story was footballer Cristiano Ronaldo, the best-known soccer player on the planet, with 299 million Instagram followers. In a press conference, Mr. Ronaldo said people should stop drinking Coke and they should be drinking water. At the same time, he removed 2 bottles of Coke, a sponsor, from the table he was sitting at. That wiped about $4 billion from Coca-Cola's share price. Amazing. My favourite story of the week involved Fortescue Metals. The iron ore group founded by Andrew Forrest has become the conduit for a $100 billion hydro project in the Republic of Congo. It's the largest in the world, is known as the Grand Inga Project, and includes operations in Kenya and Ethiopia. Mr. Forrest earlier this year established Fortescue Future Industries to greenify Fortescue, and this is how he's doing it. The Congolese government has given Fortescue the rights to run the project, and interested parties need to talk to Mr. Forrest and friends. And that's everything you need to know from the last week. I'm Sean Aylmer. We'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.